morning, apes. Hope everybody's doing well here today, and thank you for tuning in with us on this pre-recorded video segment. We are not doing the Daily Peel live streams here today. We are experimenting with some new formats here. Going to go ahead and try out these video recordings. As you guys can see, we're a little bit more casual. You're getting a sneak peek into my bedroom here at the Daily Peel Global headquarters. Because, you know, just like Elon Musk, I sleep on the factory floor. I am breathing this in day out, just for you apes right here. So welcome to the first edition of the most important video that you're going to watch every single day for the rest of your life. All right, so instead of the Daily Peel live streams, we are doing these pre-recorded video formats. Like I said, trying out with some new stuff. You know, a lot of people would have a bookshelf or some other nerdy shit set up in their background here, but at the Daily Peel Global headquarters, we know that reading is boring and stupid, and so we would never want to force you guys to do that. But we do send out a newsletter every day, so in order to supplement that, we're of course going to give you this much more fun, kind of dynamic reading here in this video. So thank you for joining us. When we get as big as Mr. Beast, you guys who watched this video here, maybe we can give you some IPO shares for the WSO Alpha portfolio once we of course do go public and become even bigger than the SPY index. All right, but either way, enough nonsense, enough of the housekeeping. Let's go ahead and dive right in. So we're coming at you today with the Daily Peel number 660 on this beautiful Tuesday morning. It is March 5th, 2024. Can't believe it's March 5th already, but it is 11:52 a.m. here, and we got a hell of a lot to talk about. First and foremost, all of you who use TikTok may have noticed that the app has been a little bit quieter over the past few weeks. That's not because the CCP got into the spyware or anything and decided to turn down the volume on some of that nonsense Taylor Swift music, but it is because there is some beef going on between TikTok and one of the biggest music producing, record label, whatever kind of company you want to say, one of the biggest musical production studios in the entire world, Universal Music Group, has decided to turn their switch off on the TikTok app. We'll be talking about that in just a quick second. Then, of course, we'll get into some stock movers of the day. Tesla was down big time. You guys know we have the Tesla report coming out this week. Definitely stay tuned for all of our thoughts on that. Then finally, this weekend, we got some breaking news out of Cupertino with Apple deciding to cut plans for one of their allegedly most innovative kind of new products that they were going to be releasing. We all know Apple is going hard into the software game, and this seems like another edition of that. So let's go ahead and keep scrolling down. Let's take a look at the market snapshot for the day. WSO Alpha portfolio, absolute piece of shit day yesterday thanks to a couple of our holdings. We were down 31 basis points versus the S&P's loss of only 12 basis points. That brings our year-to-date return down to 7.85% versus the S&P's 8.18%. Don't even ask me about the NASDAQ because they're absolutely humiliating us for the year so far. But you guys know it's early. You know that we'll always make a comeback here. Just like 2023, we'll probably be right in between these two at the end of the year. I'm certainly keeping my fingers crossed that that's the actual outcome that we get. If we do continue to see these cryptos absolutely rip like we are right now, Bitcoin and Ethereum in particular, then we should be on top of all of them. Now, we do have Bitcoin trading at about $67,388. Let me go ahead and check that price action here this morning, see if it's set that new high yet. Actually, let me go on to CoinGecko. All right, no, so it looks like we're trading at $65,121.38 right now. It's actually down bigly, as a certain former president would say, from a high of $68,912.84. That is about $70, $80 short of the all-time high of $68,990. No new all-time highs just yet, but it seems like we're right on the cusp of it, especially if you're bullish. Definitely get in on that now. ETH not even close to its all-time highs of near 5,000. We'll see if it can get back up there. We would absolutely love it because that's pure outperformance for us. Now, the S&P 500 obviously doesn't have any allocation to Bitcoin, so if these continue to absolutely rip, the WSO Alpha portfolio will simply just benefit from that because we have an actual weighting to these crypto assets, whereas the S&P 500, the NASDAQ, and all these traditional indexes don't actually have that. But so once we IPO, maybe you guys will be able to get some spot Bitcoin and Ethereum prices within the Alpha portfolio. Definitely stay tuned for that, and we'll probably be even bigger than SPY as soon as we list. But let's not get too excited just yet. We have some banana bits of the day. I do have 5 to go over here. It was a busy weekend, busy night of news as well. First and foremost, we got to talk about some antitrust regulation. This is one of the few things that the EU or that Europe does actually better than the United States, and that is actually punish their companies for violating antitrust rules. Specifically, this was a fine levied on Apple for bullying the shit out of companies like Spotify and other music streaming platforms by charging a 30% tax, whereas something like Apple Music obviously doesn't have that. The EU laid a heavy fine down on them. I mean, nothing is a heavy fine for Apple unless you're charging them the GDP of a small country. So obviously it wasn't too much of an impact there, but it's good to see that at least the regulatory winds are blowing in the right direction for us consumers. Then, of course, digital assets funds, they actually had their second best week ever last week. They took in a shit ton of inflows as the price of crypto, specifically Bitcoin and Ethereum, ripped right through the roof. We saw a lot of activity going on for these holders. Definitely go ahead and check that out. And then, of course, everyone's favorite digital asset is set to reach new all-time highs. Bitcoin was ripping yesterday. It was approaching that level. But, of course, like we just said, it didn't actually reach that. Still go ahead and click on that story. Goldman Sachs, they published a bull bear index, and that just hit a fresh high for optimism right now. Thankfully, this is not a contrarian indicator. I assumed it was, so that's what I was looking into before adding this to the list here. But it's actually a fresh high for optimism. It's a very bullish sign, or at least not bearish at the very least. Then, of course, finally, corporate bullshittery is also near an all-time high, as the spread between GAAP EPS and non-GAAP EPS has hit a 3-year high. Quick explanation on what the hell that means. So, GAAP, the generally accepted accounting principles, this is basically the accounting standards that companies have to report by. This is the requirement in their reports. In 10Ks, in audited financial reports, it does have to be on a GAAP basis. Now, you can report a non-GAAP, which means just however the fuck the company's accountants want to do it. You can report that alongside a GAAP basis reporting. And so what we're seeing is the largest spread between GAAP EPS and non-GAAP EPS. So basically, GAAP EPS is about this, whereas non-GAAP is about this. And so we're seeing a nice wide spread there. Corporate bullshittery, accounting shenanigans at an all-time high. See if we got any WorldCom or Enron sitting around right now. Eventually, the tide comes out and we find out who's swimming naked. Shout out to old man Warren Buffett for putting that horrific image in my mind. All right, but moving on into the main story of the day. So we're talking about when the music stops. You guys might remember this legendary scene in my personal favorite finance movie of all time, Margin Call, when the CEO sits down and basically says, I get the big bucks because I know when the music stops, and whatever other creepy, kind of ghoulish nonsense that he was saying in that scene. But we do have a lot to talk about here. So TikTok, like we mentioned earlier, is beefing heavy with Universal Music Group. Basically what's been going on here is, as TikTok has blown up to become the official 4th largest social media platform in the world. I know on this list it says it's 5th, but WhatsApp is obviously not a social media platform. So it's the 4th largest. And even if you don't count YouTube, it's actually the 3rd largest behind only Facebook and Instagram. YouTube, obviously a little bit different, but regardless, TikTok, the 4th, 5th largest social media app in the entire world. A lot of its blowing up is directly linked to music, dance, those kinds of videos on their platform, a lot of lip syncing stuff at the very beginning. And to do so, they rely pretty heavily on production from talented musical artists like those represented by Universal Music Group. However, at the end of January, Universal Music Group and TikTok, they hit the end of their deal for recorded artists, which basically means that all of UMG's signed artists, all their music got pulled from the TikTok app. Then at the end of February, they hit that same thing with UMG's publishing artists. So publishing is a little bit different. They're not fully represented by the company or any one of its labels, but it is something that UMG would have the right to publish. So all of this content has been pulled from TikTok. That means any song associated with any one of their artists is completely gone right now. And it's not like we're talking about small-scale artists here. UMG is some of the biggest in the world, like Travis Kelce's girlfriend, I can't remember what her name is, but anyway, Travis Kelce's girlfriend is on there. It's people like Drake, The Weeknd, Bad Bunny, Kendrick Lamar, U2, Adele, Post Malone, many more that you guys love out there as well. Pretty much all your favorite artists. So it has officially been pulled from TikTok. This is a huge deal for both the company itself, for both companies really, and for the industry as a whole. Now, in addition to being a huge deal, this is also very unique. Every other social media app in the world has been able to figure this out. YouTube, Spotify, Meta, they all have deals with UMG that, even if you say that they're not fair, it's something that both parties agreed to. So it's something that they can at least construct right there. But at least as of right now, this is currently a lose, 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 lose situation for everybody involved. UMG, they would love to have their musical artist content on TikTok, the fastest growing social media app in the world. That sounds pretty nice to me, and I'm sure they would agree. The artists would certainly agree as well. They probably love seeing kids and, teenagers, whatever the fuck, recording cringy ass dance videos out in their driveway, doing some shit like this. I'm certainly not going to dance for us right now, but this is a huge loss for them too, because they just want the widest distribution possible. Like whatever that song is, they say, I don't care about the money, I just want to make the world dance, or some shit like that. That's this fairy tale idea that all these artists have, and they're not getting to do that right now. Big loss for them, big loss for UMG, big loss for TikTok by not having these videos available, and of course a big loss for you, the users of TikTok, because you're not getting this content with some of your favorite artists and your favorite songs out there. Everybody else has been able to figure this out, but TikTok is being a little bit bitchy right now. And This kind of perfectly sums up the state of not only the music industry, but the general economy. There's this kind of balance going on right now between old economy companies like UMG and new economy, new age digital era companies like TikTok. It was nice and easy back in the day when it was just selling records and CDs and whatever other ancient nonsense that your parents will bring up once in a while. Basically, it was nice and easy back then, but in the new age of streaming music, it's been pretty tough. We saw this with Napster, and the launch of Napster in the early 2000s was really where shit started to hit the fan. That was continued through apps like Pandora and then epitomized by Spotify, but still, they've been able to come in and figure it out. So the beef between these two is kind of the perfect representation over that dynamic right there. It's which of these companies has more power? Is TikTok going to go to UMG and say, all right, whatever you want, we just need your music back on the platform? Or is UMG going to go to TikTok and say, all right, whatever you want, you can give us however much money you want, give us no money if you want to, just get our content on your platform? It's a tough question, but what we know right now is that TikTok pays less money to UMG than even fucking Peloton. Despite being 100 times as big as Peloton, they've been able to work out some kind of a streaming arrangement where they pay way more money to the company overall. Still, it's a very interesting dynamic right now. It's a very quiet app. The only ones really happy about it are people like my dad and the other boomers out there, where it absolutely ruins their entire week when they see, teenagers dancing to songs in public. Like, seeing a teenager having a good time just completely destroys their entire day, probably ruins their week, but at least somebody's happy about it, I guess, at the very least. But for now, we don't have any answers. Definitely stay tuned on that, because it's going to be interesting just to see that balance of power between old economy and new economy. All right, let's go ahead and move into some of the bigger stock movers of the day. Supermicro Computers. You couldn't come up with a company that sounds more like a scam than this one does, but still they managed to get the job done. Just like when your friend talks about getting an offer from Goldman and you never actually believe them, then the offer miraculously actually comes through someday. You can't believe it, but it was their plan the whole time. The same dynamic is happening to Supermicro right now and entering the S&P 500. That company was officially added, or was selected to be added yet. They do these kind of quarterly rebalances, so that'll be at the end of the month. And so Supermicro will be in, Whirlpool is going to be out, Deckers Outdoor is also going to be hopping in, and I forget what the other company that was dipping, it was actually Zion's Bancorp. So we have Supermicro and Deckers coming in, Whirlpool and Zion's Bancorp coming out. Both Whirlpool and Zion's are over 100-year-old companies, so they've been around for a while, they've been in the index forever. Now this is a completely new state of the world, complete game changer for these companies going forward. Either way, markets were absolutely hyped. This makes a lot of sense in addition to just reputationally, it shows that you're a good company. And secondly, all of these index funds like SPY and other ones that track the S&P 500 are now going to be forced buyers of shares in Supermicro in order to continue to track the index with the smallest tracking error that they can. All right, let's go ahead and move into another S&P 500 member that probably won't be lasting very much longer either. And that is, of course, Macy's. Now, I'm not saying she's a gold digger, but Macy's did say to their bidders here this weekend that, fuck off, I'm going to need some more money than that. Stock was up 13.6% yesterday as Arkhouse Management and Brigade Capital both increased their bids to take Macy's private from $21 to $24. That's a 14% jump. The stock was almost up 14% as a result. Basically, there is still some merger arbitrage because a lot of people clearly don't think that these companies are actually going to go ahead and buy Macy's, but it was a great day for the department store, something much needed for them. All right, then moving into the what's rotten names for the day. Spirit Airlines. Everything about this company is rotten, from the stock to the seats on their flights to pretty much everything that you can name, especially the cost of even wanting to bring on a goddamn carry-on. But either way, fuck Spirit. They're a soon-to-be corpse anyway because JetBlue has officially abandoned them. JetBlue saw Spirit out there drowning in the middle of the ocean. They decided to jump in. They were trying to be heroes, and they got over to Spirit, and they realized that it was just splashing aimlessly, completely lost all control, and they decided to get the fuck out of there. JetBlue did not save Spirit. They have officially called off their deal. Spirit, they're not immediately going bankrupt or anything, but go ahead and take a look at their balance sheet and tell me it doesn't make you a little bit nauseous. It's absolutely disgusting. They got to go through this refinancing on their own. At least they have a new, very nice $69 million payment from JetBlue for breaking up the deal a little bit early. Hopefully that helps out, but spoiler alert, it will not. Okay. Moving into our last stock mover of the day, we have Tesla, down a big 7.2%. This is the exact opposite of what happened when we were working on that Zillow report. Zillow absolutely ripped as soon as we started covering it. I think word got out on the street that, WSO Alpha and the analysts on our team were covering this stock going forward, so the stock clearly ripped. Apparently, word hasn't got out that we are covering Tesla here because the stock was down 7.2% yesterday. This is some weak production numbers out of China. It affected Tesla and every other EV maker that has operations in that company. This is a short-term hiccup. It's a speed bump in the road. Stay tuned later on this week for our thoughts on Tesla. Personally, I'm extremely bullish. I mean, I went into this without really an idea. I've been a bull, I've been a bear in the past. I'm part Ben Graham, part, Jesse Livermore, whatever the fuck else you guys want to say. So it's a very tough call, but to me, it comes down to entirely how you view Tesla. If you think it's an automotive company, you should short the shit out of this thing. If you think it's a long-term technological leader, you should absolutely be buying shares hand over fist. That's kind of what we say in the report. Stay tuned to get the actual details on that and have some numbers to the thesis. All right. And then moving into the thought banana of the day. Anybody that's been unfortunate enough to go on a car ride with their parents in the early 2000s, especially in the upper Northeast, knows that dreaded phrase from their dad when he turns around and says, "I will turn this car around." Now, I'm sorry, Dad, you're the only one that wanted to drive 6 hours to the Baseball Hall of Fame in Cooperstown, New York. But either way, we did it, and we had an absolutely phenomenal time anyway. But very much like that, I will turn this car around. That's exactly what Tim Cook and Apple management said to their development team here this weekend. The iCar has officially gone bust. I don't even know if a lot of people knew this, but Apple was developing its own car. It was allegedly sick looking. I mean, if you look at this image that's actually in the piece, that thing is fucking dope. I would pay millions of dollars for that. I would sell my kid's entire college fund just to get that car, pretty honestly. But they have officially cut it off. Apple spent about $10 billion in development of this both electric vehicle and autonomous vehicle. But of course, we got nothing out of it. There's bigger fish to fry going forward. So the car was supposed to look pretty fucking sick. It looks sick on the interior as well. But like I said, Apple is having some problems. They got bigger fish to fry, and they got to reorder their priorities here. Every other company in their industry has been absolutely mooning lately, and it's all because of artificial intelligence. Meanwhile, Apple has been a stoic underperformer of all of these companies because they haven't said anything about artificial intelligence just yet. But clearly, they've realized that's the direction everything is going in. They've decided instead of burning $10 billion a year on the Apple car, they should probably start to make some investments into artificial intelligence in the new age of technology that's going to be coming out. So now, $10 billion a year on the Apple car, I mean, it's not a huge amount. Apple makes $72 billion, Apple has $72 billion in cash and marketable securities on their balance sheet. They also have nearly $100 billion in annual net income as well as annual free cash flow. Not a huge detriment whatsoever. It's kind of like Google's other bets category. It's just shit to fuck around with. They have so much money, might as well set some of it on fire. So that's what we're kind of seeing. But if you also take a look at this chart, we can see that Apple's revenue from services has gone from about 10% to near 30% over the past couple of years. Nobody cares about iPhone sales numbers anymore. Back in the day, I was in high school when this was going on, but still, this is what I'm told by boomers that are still alive somehow. But people would basically be sitting up on their computers waiting for the earnings report from Apple just to see how many iPhones sold. Nobody does that anymore. It's officially becoming a services-based company, and as a big part of that, there's going to be artificial intelligence investment. So Apple is very quiet. They don't like to talk a lot, and they certainly don't like to kind of come out and flex like every other tech company in the world loves to do. Apple's a little bit more cool, calm, collected than that. But still, they haven't said anything about AI, and the stock is suffering because of it. It's not like the stock is down, but it's suffering relative to the other mega cap tech companies. So our guess is that they're going to be reinvesting a lot of that $10 billion into actual artificial intelligence. Now, as a roughly $3 trillion company, there's only so many industries that Apple can go into. I don't know if you guys know Scott Galloway. He's a business reporter who's, it seems like his occupation or his profession, the way that he pays his bills is by getting takes wrong. But he did actually manage to put a few sentences together that made sense in his 2017 book, The Four. Here he uncovers the hidden DNA of Amazon, Apple, Facebook, and Google. Promises isn't an advertisement for it, but he makes a really good point in this book. When you're a company as big as Apple and your investors are expecting you to double revenue in 5-10 years or something like that, there's only a few industries that you can go into. He identified healthcare, automotive, and education as basically the big three industries that Apple could have gone into. Obviously, because they're an evil corporation and they hate the world, they're not going to go into education or healthcare. They went into the automotive industry. Obviously, now they're cutting that off because there is now a fourth industry that they can go into to help double, triple that revenue in that 5 to 10 year period. And that is, of course, going to be artificial intelligence. The only downside is, what the fuck are they going to call it? IAI or something gay like that? Either way, we are not very excited for it. We're excited for their announcements and everything, but it's a damn shame that we're not going to be able to cruise around in the iCar. All right, and then finishing everything up for the day here, we of course had to finish with the Steve Jobs quote. He came in and said, sometimes when you innovate, you make mistakes. It's best to admit them quickly and get improving with your other innovations. Apple started innovating on the car back in 2014, so it only took them about 10 years to actually cut that off. Clearly, they weren't listening to the man himself. All right, guys, that does finish everything up for us here today. I know I say this every day as well, but we really need you guys to leave comments. Let us know what you like. Let us know what you hated about this video format. Tell us where we can improve on the writing and everything, too, if you actually do spend the time to come in and read this like the nerd that we all are. Either way, thank you guys for joining us here today. We'll be back at you with another kind of pre-recorded video session tomorrow. Stay tuned. Love to see you guys. Happy trading.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.